Morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of AFM. I hope I'm audible as well as visible. Apologies for the delay. Okay. Uh, but what is it that we're going to talk about today? Everybody, our सबसे सस्ते 5 दिन is here. That means at this point of time, if you are thinking to enroll into any of our courses, then you should enroll right away. Reason, सबसे सस्ते 5 दिन is here. From 29th to 2nd of January, you will get all our courses at the lowest prices. And that means you are not going to get it at 70% discount, 75%, or not even 81%. The discount now is of 85%, which is by far what you can say is one of the biggest ones that I have seen. So that means if I talk about the area of AFM, or if I talk about the entire preparation of JIIB, everything is here. You just have to join in and become a part of the Adda team. That means you can join in for the entire studies, and then that too at a lower price through this particular time period. Then you will get it at the lowest price ever. Okay? Acha, chaliye, let's begin this. And at the same time, please go ahead and share this particular session because it is very important. Um, your spirit of motivation towards me, this is something that makes my entire class more meaningful to me. Definitely. Okay, now we were talking about module B. In this case, what are we talking about? Module B, company accounts 2. We were talking about company accounts 1 in the last class. So I'm continuing with the company accounts 2 today. And when we talk about this is the first question. The first question is, the following statements apply to the equity shareholders. Which one of them applies only to the preference shareholder? Okay, everybody, if you are looking over to the courses now, then use the code Y541. Just a moment. Use the code Y541 to get 85% discount. But this is only till 2nd of Jan. This offer will end soon. So if you are planning to buy our courses, then please go ahead and use the code Y541. Okay. Let's continue. The particular question says, when we talk about preference share, how is it different from that of equity? Preference shares have got a benefit there that the preference shareholders can get the amount even when the company is having little amount. Equity shareholders will face problems because there is a rule. Equity shareholders cannot get the money in the way everybody else gets. They get a residual amount. If a good amount of money is left, they're good luck. If not a good amount of money is left, then again it is their fate, I would say, because they are the scavengers. Scavenger means whatever is left, that is what they are left with. Now comes the shareholders' risk at the loss of investment. When there is a loss, the loss is for everyone, be it equity, be it for preference. So, not the point. Shareholders bear the risk of no dividends in the event of losses. This is for both. There is no point where preference has got more importance than equity. Shareholders usually have the right to vote. No. Preference shareholders can never get the right to vote until or unless there's a condition. The condition says they will get it only and only when the preference shareholders are having a situation where the preference shareholders are not paid the dividend for the next 2 years. That's included. Then the dividend are usually given at the set amount in every financial year. Yes, they are given the amount every financial year. So technically, dividends are usually given at a set amount in every financial year. Okay. Then comes the first question afterwards. This is Joy Limited issued 2,50,000 shares of rupees 10 each at a premium of rupees 1, as application is 2.5 per application. In terms of shares, you will always find there have different installments. What are those installments, everyone? The installments are of application, which is of 2.5 rupees. Then is of rupees 4, which is allotment. Then is for the remaining in the first and final call. 6.5 is done. Then we are left with 3.5. That is first and final call. Now, applications were received for 5 lakh equity shares, but the company allotted them only 2 lakh 50 shares. Excess money was applied towards the area of allotment. People applied for shares which was more than the current values. So then last call of 500, there were people who didn't pay the money. So we asked them for money, they didn't pay, and ultimately their shares were forfeited after the due notice. The question says this is a case of what? Oversubscription. Oversubscription means we have 2,50,000 shares only. We have a limit, but the applications received are of 5 lakh. Then comes the specific area of pro rata. Pro rata means we are not giving complete subscription. We're going to give half. We cannot give. See, if I have 2 bottles, even if the person asks for 3 bottles of Coke, I can still give only the one which I have. So the limit is only what you have. If the company can issue only 2,50,000, they can issue only 2,50,000. Forfeiture is where you issue the shares, and then what happens is there is a forfeiture. What do you mean by forfeiture? You asked people, ki, sir, your amount is pending. Sir, your amount is pending. But they didn't pay the amount. So ultimately, you are scrapping off their name from the organization's list of shareholders. So technically, all these 3 points are covered in this long case study. Now, this case study can also be converted into a practical question. What is the amount total received in allotment? What is the total amount received in application? What is the total amount of money which was pro rata? What is the amount which was excess? All those things can be actually asked to be calculated, and this particular question can be converted into 3 to 4 different set of questions minimum. So that's the point regarding this. Okay. The correct answer is all of the above. So let me put it that way. Done. The answer is all of the above. Okay. Now, okay. I hope the questions are clearly visible. I just saw it just now that it wasn't visible properly. So I hope it is visible now, right? Now moving on to the next set of questions. The next question says, which one of the following, this is for the area of company accounts 2, where you are going to study about the various classification of the classification of various areas in terms of the tangible and intangible assets is basically classification of all the assets and liabilities which are a part of the balance sheet. Which one of the following is not classified under intangible assets? Brands, trademarks, computer hardware, mining rights, goodwill. Intangible assets are those assets which cannot be touched. So if it cannot be touched, then what would be the answer? Brands, trademarks cannot be touched. So that is true. Which of the following is not classified under the intangible assets? Which one is not, everyone? What would be the answer in this case? Brand trademarks is basically something which is an intangible asset, you cannot touch it. Mining rights, you cannot touch it. Goodwill, you cannot touch it. But computer hardware, I can touch my PC. That's why I'm teaching you. So technically, in this case, what I'm doing, computer hardware is a tangible asset. Tangible means something that can be touched. Taken? Done? Here comes the next question. Which one of the following is not the list of statements which form a set of financial statements as per Ind AS 1? Statement of changes in equity for the period, statement of changes in assets for the period, statement of profit and loss for the period, and comparative information in respect of previous accounting period. What would be your answer? Among the following, which is not the list of statements which is formed in terms of AS1? Acha, AS1 includes your balance sheet, Your profit and loss account, the schedule for the same, all these things are included in it. So P&L is a part of it. Equity is also part of it. Then comparative information of the previous is this is also required. When they prepare the books of accounts, na, this is your current year and you also have your previous year as well. That's how you show your books of accounts. So this is also a part of it. This is also a part of it. This is also a part of it. So the answer is actually, this is also shown. You do not prepare the statement of changes in assets of the period. Technically, this was given in the IIBF book, but the correct answer is comparative information in respect of a previous accounting period is already shown. Achha, but when we talk about is not the complete list of statements which form complete set of automatically this happens, but this is not outrightly said. So then we can say overall statement of changes in assets for the period is never shown. So I would still go with B. B is not the correct one. This is not shown. D is automatically taken into it. So basically the answer is B. Okay, here comes the next question. In the balance sheet of the company, the trade receivables are required to be subclassified into three categories. Which one of the following is not among these? When we talk about the trade receivables are of three types: secured and considered good, then uh, secured and considered good, and last one is dead loss. So that is all of these are a part of it. So secured and unsecured are always a part of it, but there is nothing called there is nothing called doubtful. We have secured, unsecured. So I think there is some issue with the options that I've taken up. Let me just correct it for you. The correct answer is we don't say the term because when we talk about trade receivables, we cover this particular category. Okay? Chaliye, let's continue further. The next question is this. Which one of the following entities is required to present consolidated financial statements? Okay, consolidated financial statements are those companies basically which have a share in some other company, and that is very significant. So technically you are actually owning that specific organization. So all companies having more than one division, all government companies, entities that control one or more other entities, all the companies are required to present consolidated financial statements. What is it that we are going to do? Which one of the following entities is required to present consolidated statements? So when we talk about this area, all companies, uh, all the companies are required. So technically this is wrong. D is definitely not the answer. And at the same time, all government companies are not required to do this. Now, when we talk about entities that control more than one division, that answer is going to be C, everyone. If I talk about this question, the answer is going to be C. Entities that control one or more entities are to be covered in this area. Acha, next question. In the prescribed format of statement of profit and loss account, which one of the following items is not included? Which one of the following is not included, everyone? EPS or earning per equity share, then profit before tax, profit and loss for the period, or PE ratio. Which one of the following is not included? EPS is a part of it. PAT, PBT, all are a part of it. Profit or loss is also a part of it. The thing which is not a part of it is PE ratio. The profit calculation, when we are preparing the P&L only, na, all these things are visible. EPS is automatically calculated. It's a part of the format itself. Profit before tax has to be calculated because we have to show the tax calculation as well. So profit for the period is automatically shown. So these three are not something where you have to put an extra effort to show, but you have to put an extra effort when we are talking about PE ratio, right? Next point, which one of the following is classified as a current liability in the final books of accounts? Buildings, debentures, goodwill, machinery. Among the following, which one will include it? Building, debentures, goodwill, or machinery. Current liability is basically the liability which is basically something which we have only for less than 1 year. Okay. Now, which of the following items is classified as current liability? Technically, this is not a current liability. Actually, this is a non-current liability. In this case, debentures ideally are considered as a non-current liability. Now, this correct answer would be debentures. Okay. Chaliye. Now, moving on to the next question. This is actually a non-current liability. So I think the question has to be rephrased. Which of the following is a non-current liability? A building, goodwill, machinery. They are all non-current assets. And under non-current assets, you can further classify these three as this is a fixed asset or a tangible asset. This is actually a tangible one. This is also a tangible one. This is intangible. Something which we cannot touch at all. है ना? This is the answer. That is debentures. In the income statement of the company, where would you find the items dividend paid? Operating expense, other income, financing activities, investing activities. Dividend paid is basically the money which is paid to the shareholders as a reward because they have invested their money in the business. So when they have invested the money in the business, what will it be called? The dividend paid will be called the financing activity because to keep the finances running, you want finances for the business. You want the finances to be invested in your company. And for that, what will you do? To keep this particular finance in your business, you will always look forward to giving them rewards so that they stay in the organization. So dividend is basically a reward which is given to the equity shareholders to continue their investments in the organization. Then what category would share capital fall under the balance sheet of a company? Current liability, fixed asset, equity and liabilities, and current assets. Equity share capital is something which is the shareholders funds. Basically now in the top in the balance sheet they have equity and liabilities. They call it equity and liabilities, and then they write it as shareholder funds. So when we write in the shareholder funds, which is the equity itself, they have equity share capital, they have preference share capital, and they have reserves and surplus. These three things are a part of the portion that is equity and liabilities. Okay, everything else is current and non-current. Non-current things are the things which are there in the business for a long term, right? And current are those which are for less than 1 year. That is equity and liabilities. Where would the sales revenue typically be reported in the company's income statement? Sales revenue typically be reported in a company's income statement, cost of goods sold, other income, operating expenses, or operating revenue. What is sales revenue, everyone? The income that you are earning because you are doing your business, isn't it? So in this case, what's going to be the answer? The answer is going to be operating revenue. Okay? The answer is actually operating income is operating revenue. The income that you earn because you are running your business. You are running your business. The answer is operating revenue. What is the classification of retained earnings in the equity section of the company's balance sheet? Current liabilities, non-current liabilities, shareholders' equity, or current assets? What is the classification of retained earnings? When we talk about retained earnings, this is that part of equity which we are keeping separately, which we are retaining. Retaining means we are saving. Okay, we are saving. So in this case, again, I told you equity share capital, preference First is equity, second is preference, and third is the reserves and surplus, which includes, or the other name of it is retained earnings. So all these things are a part of shareholders. We actually call it shareholders funds. So in this case, the correct answer is only one part matches, that is C. That is shareholders equity is the answer. Done, everyone? Okay. So let's end this session here itself. But before I end this session, have you reviewed the courses yet? And if you haven't, then you are missing out a very important thing. I told you in the very beginning that we are here with the Sabse Saste 5 Din. Those 5 days where you will get our courses at the lowest price ever. So what you can do is check it out. I think this particular price that I've heard is when this particular vertical was started. I think it's been almost 2 years that I've been working with the particular office that then when we talk about this area, I've never seen such a price drop till now. Now the price drops can be stated as JIB and CIB. Go on to the area of JIB and CIB, click onto this area, and then you have the JIB CIB Mahapack. Mahapacks are the best situations when you are looking forward to double validity, because double validity means you buy it today and then whatever the period is, you get it for double. If it is for 12 months, you get it for 24 months. For 24 months, that means entire JIB, entire CIB. That means both are covered, and at the same time, CIB electives are also covered. Not even a single penny has to be spent if you buy this particular Mahapack. You get 1100 hours of live classes, 561 test series, both English medium and the bilingual. Then ebooks are also available. The previous videos of the previous batches is available. Current batches for these 2 years will always be available to you. That means you don't have to pay separately for MCQ batch, for revision batch, numerical batch, whatever batches are coming up. Every single batch is opened up for you. Not even a single more penny has to be spent by you. Then it also includes 10 plus hours of mini marathon, 5 plus hours of Maha marathon, practice papers, what not that you might be thinking of. You just have to use the code Y541 and apply it. As soon as you will apply it, you will get it for 9598.88. That means you are spending 9598.88 and you are getting it for 2 years. That means 2 straight years you can get it. This is one of the lowest prices there. It is at having 85% discount, 84% discount. Use coins, use this particular code, you will get it for 85%. Now, one more thing, everyone. If you are thinking, nahi, I just want only JIB Mahapack, then click on the area of only JIB Mahapack. See, it is already available. If you are using the company code there, it is available at YE82. It is available for 82. Use the code Y541 and you will get it for 85%. If you're using the app, this is available at 5332. That means for 1 year, you can get it for a total amount of 5332. So that means if you're thinking of clearing your JIB, clear on your JIB. And then maybe if you want, then enroll yourself. Or during this period, once you have cleared it up, go ahead and extend your particular Mahapack or upgrade towards the next Mahapack so that you get the entire CIB as well. So that particular option is available if you're taking the entire courses. This particular benefit is something that you should not let go, because this particular benefit doesn't come that easily. And when we are here with this particular benefit, then you should avail it. Right? Chaliye, that's it for the day, everyone. I hope this session was fruitful and it helped you in terms of learning the company's accounts further. Tomorrow, now we'll be meeting on Monday, right? And Happy New Year in advance, everyone. Thank you so much for being there, and we'll be meeting on Monday now at the same time, 7:30. And don't forget to buy the particular course as early as possible.